to get ourselves prepared for getting back from the Labor Day holiday. Here is our daily chart with just a few key levels marked on it. I use this one to focus on where we are at in terms of those key levels and the simple moving averages. We have a brand new halfway back for the quarter and for the year based on this new all-time high that we set the week we just traded at 35.88. So right now, our halfway back for the year. We take the low that we traded in March to the high that we traded at the beginning of September here, divide it in two, add those two numbers together, divide by 2, we get our 2020 halfway back, which is now 28.90. We have a new halfway back for the quarter, starting from our low that we traded right here on the very first trading day of July at 31.0117. Add that to the high. We've made so far for the quarter at 35.88, divide by 2, and that is our Q3 halfway back. And on Friday, our low came down and reversed just 5 points above that Q3 halfway back. So this is going to be our big line in the sand as we go into next week. Looking a little closer at the chart here are some clues that gave us on Friday, about what's going to happen next week. We came down, traded all the way down here, reversed all the way back up, got all the way back up to about here, around where we had closed on Thursday, but then reversed and fell down again at the end of the day. And we closed just below the 20-day simple moving average. Following the 20-day line back here. Here was a little sell-off at the end of July to try and break the 20-day. All we did was look below it and reverse and closed well back above it. Here was the middle of July, reverse above. Going all the way back here, when was the last time we closed below the 20-day? It was back here at the final trading day of June. That was the last time we closed below it. Here's the first trading day of July. It was an open move above, open below it, move above it, and close above it. So we've closed below the 20-day now for the first time since all the way back here at the beginning of the quarter. Our move down on Friday was a reversal just above the halfway back point. So I think that if we had wanted to say to the market, we've retraced 50%, we're going to reverse now and get back on track to rallying, we would have closed back above the 20-day at least to end the week. But we faded it by a point and closed below it. So to my mind, that means we've got a little further to go. And if we break the halfway back point for the quarter, that puts us vulnerable to testing all the way back to the low of the quarter, all the way back here to that July 1st low at 31.0117. If we were to trade down to test that low, we would be looking at a test of the 200-day simple moving average. So if this market wants to get all of FANG plus Tesla and Microsoft and everything else that has really been rallying, if they want to get all that stuff pulled back, a casualty of doing that would be another move down on the S&P, maybe all the way down here to test above the 200-day. If this rally was nothing but, if this rally and then subsequent sell was nothing but some profit taking ahead of that weekend and ahead of ES contract rolling over, which happens next week, Thursday into Friday, that symbol will roll over to the December contract. If all this was that wild swing that the market always likes to put in as we head into a contract expiration, then in fact that's probably, I'd have to go back and look on a calendar again to count up my weeks, but that's probably what this had to do with back here in June. Then if all that was to consolidate ahead of that June contract rollover, then we have our low in and we will hold this low and continue up, or maybe just look a little bit below it but reverse above the 50-day. Okay, if we break down below the 50-day simple moving average, we could set off a multitude of stops. If it's just a little look below the 50-day but then reverse and close above it, that's a good sign. But any kind of move below the 50-day has leaves us vulnerable to really kicking into gear another whole leg lower, and especially if we look below it and come back and fail to close above it. If we do like what we did here with the 20-day, I think the next day is going to be a huge down day. You cannot close below the 50-day simple moving average. When I roll the chart back here, here was our break of the 50-day back coming off of the February all-time high. They couldn't, basically what they did was they just did this huge gap down below the 50-day. This is that massive gap that ran from 32.59 to 33.37. So this was the one that I referred to as quote unquote the big gap from February. This was a gap down below the 50-day. What if they did something like that here, to us? What if we come in and we gap down below the 50-day on Tuesday? That would be a move similar to this. I don't think we would get this kind of a 1,000 point move lower, but we certainly would do something. And also looking back here was a break of the 50-day. Here was a move down below it and a close down below it. And the next day was a gap down. And this was in September of 2019. And then, of course, the infamous, move that we made in 2018 in the fourth quarter. Here was, we were trading up at an all-time high, and we were screwing around trying to hold above the 50-day. We didn't get any closes below it, but to get the job done, they just gapped down below it, and then the rest was history. So that 50-day line is very important, and how the market, I'm sorry if I'm making you dizzy here, and how the market behaves around this. We are very close to it. So this is a really dangerous game if all these guys are doing is swinging this around so they can get into the December ES contract at a cheaper price. If that's all they're doing, then they don't want to see this 50-day simple moving average break. But if there's something more evil going on under the surface of this market, something that wants us to, really pull back all those flyers, like Apple and Tesla, then we will break that 50-day and we will come down here and test the 200-day. Okay, off of that chart and onto the roadmap, here is the structure of how that move would happen. Coming in on Tuesday of next week, we would see, either we hold the low that we've made and call that the bottom of this move. And basically what this move was to compress down this gap a little further, this gap that was created here, this third in the line of multiple gaps that happened in August. And we traded up and we had this weird sell-off day in the middle of a week in August week 2 and closed down. Oops, geez, I'm sorry about that. Oh, God. Messing up my video. This is literally like the 10th time I've shot this video too. Okay. We had this move down, we closed down here, and then gapped up open the next day, and we created this line of support from which the leg of the current rally came. And then on Friday, we completely gave this all back, and in fact broke these two lows with this push down on Friday. So we have new gap support to the gap that fills at 33.33. So we come in and fill this gap to 33.33. If that's not enough, we break lower and fill the next gap, and the 50-day is going to be right in line with the next gap at 33.06. The gap fills, and the 50-day is going to be the low 3,300. It's going to be around 33.01, 33.02, something like that. So basically, are we going to hold 3,300 or not? And if we're not, then the most that this will look below in reverse would be to fill the final gap from August between this July 31st close and the August open and low. If that, the most would be to fill that gap and maybe a little look below it to this crazy line in the sand that drove us nuts the final 2 weeks of July, 32.51 to 53. This would be the deepest the pullback can go and snap back and close back above this 50-day. Otherwise, we're going to get into that much deeper sell-off that I explained to you. Here's our weekly chart. This is what I was talking about like crazy on Thursday and Friday. If we traded down below the previous week's low at 34.13, we were in big trouble. Yeah, and which we did. Here, this is a weekly candle, but the full tail of this candle was really Friday's trading. And you can see not only did we engulf the previous week, but the previous 2 weeks. So if we had closed down here, I would say most definitely we're going all the way to 3,100, because this means everybody is selling everything in their wake right now. But we rallied back to close above the previous week's low. This is really the only bullish thing I can say about what happened on Friday. Because when we break it down here to our smallest time frame, our 5-minute chart, on which I like to keep a 20 EMA line and the RSI. And then I always mark where my moving averages are so that I know if we're breaking that intraday and any other important levels, such as Thursday's low, 34.27. What did we do at the very end of the day in the final candle? We closed below Thursday's low. We closed below the 20-day. We closed below the 20 EMA line, and our RSI was below 50. So this is all the indication I need to tell me that I think we're going lower on Tuesday. Even if we start off looking a little bit bullish on Tuesday, I think there's a good chance that we roll over and take that run at the 50-day. And then it's all the marbles are there at the 50-day simple moving average. Either we hold above that, look below that and reverse, but we must close above it. Otherwise, we got that next leg, another 200 points down to 3101 or so. Okay, have a great rest of your weekend, and as always, good luck and good trading.